Alright, what is up guys? This is video 4, episode 4 of the Rags to Riches playlist. And today we're going to be going over long positions and short positions. Okay. So you guys know what buying is, right? Or going long is. Right. If you're buying stock, you're basically buying at a certain price point and then you're selling at a higher price point. Right. So this is the position sizing tool I was telling you guys about. So the basic idea when you're buying is that you're buying at some price, and then if it goes up, you make profit, right? And then you sell. So this is how the position sizing tool kind of works, right? Your entry is going to be right here. When you place the position sizing tool, your entry is going to be kind of in this middle line, right? This middle line, right? My color is a little different, but if you have red and green, it's the same thing, right? It's that midpoint price that you're entering at. And your target is going to be your take profit level, right? So using support and resistance ideas, let's say you place a long position right here, right? So long position meaning you're going long, right? You want to buy the market. So you're placing a buy position here, and let's say you sell, right? I just have the tool on the side here, but let's say you actually do this in real life, and then you sell over here because of resistance, right? Because you're anticipating some sort of reaction, so you want to be safe, and you want to just sell your position off right here, right? So this would be entry, and then you're selling high. So you're basically buying low and selling high, right? That's where the buy low, sell high thing comes from. You're buying at a lower price, and if price goes higher, then you could sell at this higher price, and you can make a profit, right? And you're also going to have something called stop loss, right? So stop loss is the bottom of this thing, right? It's called a stop, right? Right here it says stop, right? That little black label says stop, and then over here it says target. So stop is a thing you use to protect yourself, right? It's like it's an order basically, right? You're placing an order here and you're putting it there to protect yourself from the risk of the trade, right? If the trade goes against you, you don't want to just keep losing money, right? You want to get out of the trade if it goes against you. So this is what you use in order to protect yourself, and this is what you use to basically close a position and lock in those profits, right? Because if you buy and then you never sell, all of those profits you have are unrealized, right? The profit or loss that you have is completely unrealized, which means it's not actually affecting your bank account, right? It's just like in theory, you lost or gained X amount of money, but the profits only become realized when you close a position either through the take profit or through the stop loss, right? So if you take a loss, if price hits your stop loss, you would take that loss. If you get a win, you get a win when price hits your take profit, like right here. Right, so I think that's a pretty simple thing to understand, right? Long positions, buying low, selling high, stop loss, and take profit. But now we need to understand what a short position is, right? So you can also make money by selling the market too, right? Something a lot of people don't understand, but you can also make money by selling the market. Basically, what you're doing here is you have a broker, right? And your broker is the person that helps you make transactions in the financial markets, right? Because for every buyer, there needs to be a seller. If I have a basketball, right? Let's just take basketball as an example. So I have a singular basketball and I want to sell this basketball. If I want to sell it, I need someone that's willing to buy it from me, right? And if someone wants to buy it from me, they need to have someone selling it to them. So for every buyer, there's going to be a seller. So basically, your broker allows you to connect to either a buyer or a seller, right? Depending on what you want to do. Like right here, if you want to close your position and sell, then the broker is going to match you up with the buyer, right? That's kind of what happens on the back end. You don't see that, but that's what happens on the back end. And you just kind of either, get the profit or you get the loss. And you don't see all that stuff happening, but you have to basically get a broker and they do all the orders for you. So for short position, it's the same stuff, right? Take profit, stop loss, entry. Same kind of foundational stuff we have on our long position, except now you're selling the market. Okay, and this is how it works. Okay, so you go to your broker and you borrow some shares from the broker. Okay, let's say you borrow 10 shares. Okay, you borrow 10 shares from your broker and you're basically betting that the price is going to go down. Okay, so you buy it from the broker, and you basically use those shares, and you bet that the price is going to go down. And when the price actually goes down, that's when you buy back again. So you sell here. So you basically get shares from your broker, okay, and you sell those shares. Okay, so you borrow shares and then you sell those shares, and then when price goes down lower, you buy back the shares. Okay, so let's say, as an example, price over here was $100. Okay, so let's say it was $100 here, and you sold the shares over there. So you sold borrowed shares. You sold shares that you borrowed, and you buy back when the price is 70. Okay, say that. So the price of whatever this asset is, okay, was 100, and now it's 70, and you buy back when it's 70 because that's your resistance zone, right? We learned from the previous video that resistance, right? We can get a potential reaction from it. So that's why we target this, and then we take profits here at this level, okay? And you're buying it back when it's at 70, okay? So you have 10 shares, and now all of those 10 shares are worth $70, okay? And then what you do is you basically give those shares back to the broker, okay? So you borrowed 10 shares that are equal to $100, okay? And then you sold those shares. And then now you're buying back those same shares, except now they're worth $70 each, right? So you have 10 shares that are worth $70 each, and now the price is less, right? There's a $30 difference. So basically, you make the difference between the price of the asset, right? Because it was $100, now it is $70, so you make a $30 profit, right? Because you give back the broker their shares, but now the shares are worth $70 each. So you get that difference between the price that you sold at and the price that you bought back at, right? It's simply a bet, okay? Like, if the technical idea is confusing you, just kind of understand that it's a bet, right? You're betting and you're saying that, like, okay, I bet the price is going to go higher, and if it actually does go higher, you get rewarded, okay? But if you're wrong and it goes lower, then you get stopped out, okay? Same thing for here. You're betting that the price is going lower, and then if it goes lower, you get your profit. If it goes higher, then you get stopped out, okay? That's the basic understanding. If you understand that concept, you're already ahead of most people. All right. It's simple once you understand it. But yeah, that's long position and short position. Okay, but the one risky thing about the short position is that if you don't have a stop loss, okay, so that means, like, when we trade, we always have a stop loss, take profit, and an entry point, right? We have those three things. I'm just going to write that down real quick. So we want a stop loss, right? Entry point, and take profit, okay? We always want these three key things whenever we enter trades, okay? We want these all the time. If we don't have one of them, we can't take the trade, because if we don't have a stop loss, for example, right? If we don't have our stop loss, we can just lose a lot of money. So we always need these things, okay? But let's say on a short position, you don't have your stop loss. That's a super risky thing, because in theory, the price of anything, right? The price of an asset, price of a commodity, right? Whatever you're trading, the price of that thing can theoretically go up forever, right? It can go up like millions of dollars, right? There's no limit to how high that asset can actually go. But in terms of like going down, the maximum the asset could drop to is $0, right? If an asset is $100 and then drops to $0, it can't go further than $0, right? It can't go negative. So when you're doing a long position, even if you don't have a stop, the maximum amount of money you could potentially lose is when the stock or asset goes all the way to $0, right? So you actually have like a finite maximum amount you could lose if you don't have a stop loss, right? But for a short position, there's an infinite possibility. There's a possibility that price can go up forever, right? So your losses can be like infinite pretty much, in theory, okay? In theory, if something happens and the market goes up like crazy, you could have tons and tons of losses because the market keeps going up. right? There's no limit for how high it can go. So that's the one risk about the short position, right? The long position is safe because, the maximum you can lose is 0, is when the thing goes to 0. But as long as you have a stop loss, you're fine, right? So you don't have to worry about that, right? If you're trading without a stop loss, then you might have to worry about that. But if you're following my strategy and this stuff that I'm doing, then you should be good, right? As long as you're doing a stop loss, if price hits that level, you only lose that amount, okay? So that's it for this video. Just kind of understand how to do that, right? And if you want to, you can go look at that position sizing tool. So it's right here, long position, short position. Just favorite them, and you can basically use them, right? I just like to favorite them, so then I have them here, and then I just tap. Sorry, that's not the right one. I just tap on it and then click wherever I want to, right? And then I use this tool to do my orders, right? We're gonna talk about this a bit more, but this is just like an introductory video because again, I have more content that's coming out, but I need you guys to understand the fundamentals first. But yeah, thanks for watching, and I'll see you in the next one.